All right. Hi, my name is Edith Yeung. I am the host of today's conversation with Founders Hong Kong and Joe, which is a founding partner from MindWorks. So for those of you who's just joining us, and as we're getting all the participants to join us, just a reminder: Founders Hong Kong is a nonprofit organization with the goal to connect Hong Kong founders with the rest of the world, regardless is for other founders in Silicon Valley or investors who's really prolific and active investing in Hong Kong. We're really here to help. For some of you may or may not know me, I'm one of the founding partners at Raise Capital, previously at 500 Startup, very active in investing in all things early infrastructure. But today I'm super excited to have Joe Chan. Joe and I met each other a long time ago when I wasn't even a VC. I was working on a startup called Dolphin Browser, which I think, Joe, you invested, right?
Yes.
You invested.
Yes.
Okay, awesome. So we met like many years ago when I was a baby. And so now, but for this particular talk, really quick on the agenda, is a 30-minute conversation. Joe and I is going to learn more about his story and whatnot. And then maybe after 30 to 40 minutes, we're going to open up for Q&A. So feel free to actually put your questions in either on the public chat or in the Q&A section. And I'm going to bring up the individual, each of you, to join us. So Joe will get to see you live in person on video. But anyway, I'm going to stop talking and really want to learn more about Joe. Joe, we met each other for a long time, but we never really get the chance to chat about sort of your story. How did you get into sort of tech investing and sort of your journey and career? I'd love to learn more. So what's your story?
Yeah, my story is I was born in Hong Kong, raised in Hong Kong, but I went to California for my college education. I think that's an important part of my education that really struck me like tech is a good sector because everything around me is like Google, Facebook. I think I was the first wave of user of Facebook when they just started, because at that time you can only use your college email address to log in. And when I came back to Hong Kong in 2005, that was the boom of Hong Kong financial industry. I was working as an analyst, researching different sector in Asia, such as a lot of tech company as well coming up from China, listed in US, and I was covering those sector. And from that, I feel like I should keep on investing in tech because that's the sector which will keep outperforming. And then after a while, I start to investing my own money into a lot of different companies as an angel. But I felt like I need a fund to institutionalize the process. And that's how I started MindWorks in around 2013.
Oh, wow. So almost 9 years, almost 10 years now for MindWorks.
Almost 10 years. So we are now running 4 funds and managing asset of about 1 billion.
Wow, amazing. And you're also super early investor in Lala Move and many other awesome companies. Let's go to MindWorks. Like, what is some of your focus in terms of sectors that you focus on? Tech means a lot of things, right? And also, so what vertical sectors and geography do you focus on?
Yeah, so we invest in Greater China and Southeast Asia, but then in terms of geographical focus, I think it's getting more and more blurry because of COVID. A lot of team and founders, they become so decentralized. So we only focus on team with as long as they have an Asian perspective. And in terms of sector, at the beginning, we focus in a lot of cross-border e-commerce because we are from Hong Kong. It's somehow sitting between China and Southeast Asia. A lot of fintech company would have a base in Hong Kong, and then Hong Kong is also a city for transiting a lot of services and goods. So we focus on a lot of cross-border e-commerce and logistics. But ever since 2020, we put a lot of focus on blockchain as well, because Hong Kong actually we do have a lot of big crypto company like BitMEX, FTX. They are all coming out from Hong Kong. The ecosystem is pretty good here.
That's awesome. Cool. And so with various different sectors from e-commerce to crypto, what stage do you focus on?
For traditional startup, I would say blockchain is a completely new game with a different kind of fundraising method because they raise token. But for traditional VC investing in equity, we typically focus on Series B and beyond. So in terms of the size in Asia is a little bit smaller. The Series B is typically 20 to 30 million size, and we invest 3 to 5 million. For crypto blockchain company, if they are raising in token, our minimum ticket is 500,000. Because a lot of team, they could be rather early stage.
Got it. Can you repeat just, actually, I'm super curious to learn as well, particular for, you were saying, if the valuation, just the funding size of Series B would be 20 to 30 million, and you guys usually participate like 5 to 10.
3 to 5 million, yeah.
Got it. I see. Okay, interesting. And I guess like in the Series B, in the more traditional, what's your expectation in terms of like revenue and growth rate?
Oh, for traditional, especially right now, I think the market is kind of more conservative. We would like to see a company with monthly revenue of at least 500,000 USD. But of course, it also varies with business models. Yeah, especially if you say you are doing SaaS or e-commerce, revenue is a must to validate the product.
Yeah, makes sense. Well, if the customer is willing to pay for it, why wouldn't you be making money? Makes sense. On this note, I guess since you mentioned crypto a couple of times, the crypto market has been kind of crazy. I think you and I sort of caught up last week about what's going on. Like, how do you see like what's going to happen? Are you going to pull back a little bit, or just in general, what do you think about the landscape and what's going on now?
Actually, not at all. For the audience who are not that familiar with crypto, actually, MindWorks is very bullish about the Web3 evolution. How we see crypto is like it's a new internet of money. In the past, internet I would think of it make information transmission a lot more easier. In the past, I have to get on the TV at 6:30 to watch news. That's how we absorb information, or we have to do the long distance phone number to call my mom when I was studying in the US, when there was no WhatsApp, and the internet make everything much more convenient. It makes 6 billion people get on the same platform of sharing information. That was the internet from when I get on, it was 95 till now. But if you think of it, how we transmit money is very inefficient. Over the weekend, we cannot do international wire. And sometime when I was in Hong Kong, when there was typhoon, or after 4 p.m. the bank closed, we cannot really do international wire. But blockchain will be a platform for 6 billion people to transact value. That's particularly important for the unbanked population because there are a lot of people who can get on the internet, use Facebook, using WhatsApp, use Google, but they are not able to send $1 to their friends and family. I think crypto will become the predominant method of payment in especially Africa and Southeast Asia, and the development will be super fast in those regions.
Yep. You're pitching to the choir. I'm definitely all for it. And especially I think for a while Hong Kong definitely have great talents, particularly in coming from the traditional finance world. There are just so many great people from the traditional finance world in Hong Kong jumping into this industry, which is great to see.
So I think the takeaway for all the founders or potential founders here is whether or not you're in the fintech industry, you should also observe the development of this evolution because it will affect every single startup. As long as, for example, if you are e-commerce, you can actually cover the unbanked population to sell your product because if you receive crypto, you will be able to cover those companies. And your payment in the past, if you need to build an international e-commerce company, you might have to set up a lot of legal entity and then solve the payment problem in each region. But crypto could make it possible for your business to become global, much more easier than before. So I highly encourage everyone to study this evolution, and then it might affect your business whether or not it is a fintech company.
Yeah, I'm super excited about it, and I think that there's definitely a lot of opportunities, particularly in Asia, like use cases that you definitely don't see in the US. Anyway, I can't wait to come back and hang out with you guys. I'm still stuck in San Francisco. Anyway, let's go back to MindWorks. And Joe, you're pretty active. So in general, like how many deals do you do per year? Do you prefer to lead or follow? Love to learn more how you guys work.
In terms of deal pace, we don't do a lot of deals. We have a team of 12 people screening about 1,000 companies per year, and we invest in about 10 companies a year. The new company, not including the follow-on one, because we do new investment and also follow-on. But for new company, 10 is the max per year. And in terms of the process, whether or not we lead or follow, we do both. And if we need to lead the company, it's kind of a conviction play and also timing. If we can meet the company early enough, we have enough time to do all kind of DD, for example, financial DD, management DD, and also we would do a lot of reference call to check the upstream, downstream player and your competitor, and then we would be leading the round. But sometimes we are not lucky enough. The founder might have already got some term sheet from other VC. And then in the region, we work with a lot of different VC. We always co-invest together. If it is some credible investor, we would just follow. And I think it's a matter of timing sometimes. That's why we work really hard to reach out to founders all the time. Hope that we can be the first one to meet the good companies.
Yeah, I think what you just mentioned resonate with me quite a bit, because sometimes this is your investor is basically sometimes could be longer than your marriage. So you really need to take time for an investor to be able to jump in and act fast when you're trying to raise. It's just so much better if they get to know you over time, and really good to build that relationship. And I think that, if you get the chance to pitch Joe, you don't really need to just pitch. It's more or less as, company updates and just be friendly. And a lot of times you can actually put non-investor to certain updates so you can sort of see growth over time. So with that said, Joe, like what are some of the, I guess, pitching advice or mistake that you see when founder pitch you? What are some of the things that you always look for? What are some of the things you're like, oh my God, please don't do this again?
Yeah, I think, first of all, the most important question for all the founders is to ask yourself whether or not you want to pitch to a VC, because there are always two kinds of company in the world. One of them is going for the VC money, and then you go public IPO. That's the traditional route. And now, of course, you can raise token, and then you can raise money and the VC can exit through token. That's the traditional route. And there is another route, which is you just become cash flow positive yourself and you never raise VC money, because in terms of the market you are trying to address, sometimes it's not big enough. If you go for VC money, it is tough, because VC, we are always looking for a large, very large addressable market with a regional scalability, because Hong Kong, especially I'm from Hong Kong, I meet a lot of founders from Hong Kong. If you are only targeting Hong Kong market, it's tough. At least if you want to pitch to VC, you need to prove to the investor that you are able to scale across different countries, either China or Southeast Asia or Europe, US, doesn't matter. But if you are just focusing on Hong Kong, it's too small. So prove to the investor that you can expand, and then you need to prove to your investor that you know your customer really well. I think a lot of founders focus on the business model, and then a lot of comparable of the listed companies saying that I am the Uber of, for example, tutors in Hong Kong. That's not what we want to know. We want to know that how well you know the problem and how well you can solve the problem. If whether or not you can solve the problem 10x or 100x better than the traditional method. But in the world, I think very often 80% of the problems is a little bit smaller. You may be better off just to raise a little bit of money or invest yourself and then become cash flow positive first and think about pitching to VC later.
Yeah, yeah. I think in addition to what Joe you just described, I found a lot of the Hong Kong founders, you guys are really great, like in terms of building product. And sometimes just when a lot of the founders I meet from Hong Kong will talk a lot about how the product work, which is fine. But I actually think that the most important thing when you're starting out is to be able to articulate who your target market is, what exactly do they pay to solve this problem. So then your solution is not just a vitamin, but is really a painkiller.
Yes, maybe I can give out some examples. When we invested in our best portfolio company, which is Lalamove. For those of you who doesn't know Lalamove is Uber for van. Starting out from Hong Kong and now become a decacorn, and then they have even exposure in South America, from China, Southeast Asia, South America. So when we, before we invest, we actually spent 2 days with the management, visiting over 50 customers, Lalamove, and asking them a lot of questions. Why do you want to use Lalamove instead of owning your own van or doing the call center? And then we also, there was a story that we actually booked a restaurant, a Cha Chan Tang, which is a Hong Kong local restaurant. And then we invite all the driver to come for lunch for free. And then we talk to those driver, their user experience. And it seems to me that the management know them super well, know not only the driver and also the customer. I think that's a convincing, that's really convinced me. Yeah.
I love it.
The team know the problem really well. Yeah.
That's great. So I guess like one trick would be before Joe call up all your customers to have free lunch, you need to give your customer free lunch first, so they know what to say.
Yeah, I think a lot of founders, they are trying to solve a problem in their office, but without predicting the pain point or the difficulty of onboarding a customer, especially for enterprise solutions, because there are a lot of people who are doing 2B business and they underestimated the difficulty of onboarding a customer. Yeah.
Joe, you just remind me, and I'm going to send it to everyone of this book. There's 2 books. One is called Fourth Step to Epiphany, and the other one is called Lean Startup. But what you just said resonated with me very much so, which is you cannot solve your customer problem being sitting at the office. You really need to get out of the building to really spend time with your customers and to solve real problem. So with that, I guess it's a great segue into, I love to learn more about the Lalamove and how you obviously do due diligence. What exactly did the founder say? Like what exactly do you look for in a founder? That would be like certain thing that you were, other than, okay, that he knows the customer really well. What are some of the things that sort of resonate with you when you guys first met?
And I think, first of all, when I get to know the story, it was from a newspaper. So I learned that this founder is from Hong Kong, and then he was a poker player. And then I found that this story is really interesting. How come a poker player became a startup founder? And then I read into the story, and also that catch my eyes, not the determining factor for me to invest. At the end of the day, he explained to me why he convert himself from a poker player to Lalamove, is that when he was playing poker, he found out there's an Apple Uber, and he knows that Hong Kong, there's a very profitable business called calling center. In the past, before Lala Move emerged, when we need a van, we always call a number, which is called out gate. Yeah. And even a regular Hong Kong person know that every single driver has to pay 800 to 1,000 Hong Kong dollar to that calling center. And the service was horrible. It's usually a lady who pick up, hey, what do you want? And then he will, after he take your request, he will be like, I will call you back. And then he or she would have mentioned the time, whether or not you will get back or not. And then you're just sitting there to wait for a van for 2 hours. And so he after he see Uber, he immediately applied the same logic. The same algorithm can be solving and optimizing this van problem, so that it resonates our Hong Kong experience, and we know that this business model can also be replicating to the rest of region very easily, because the service is not regional dependent. It's just picking you from point A to point B. And we have seen that from Uber, and we know that it will also work for the traditional logistics. That's why he has a sexy story himself. Not all the founder can make up the story and go back into the past, but the problem you have to solve and why you want to solve this problem, you have to explain to me really well. Yeah.
Yeah, I love it. I love the poker player turn founder story. Although, you know, for the rest of the founders who's in the group, you can't pretend that you're a poker player and every single story is unique, but it has to be true to yourself. Anyway, let's switch. We talked about like pitching, sort of some of the example that you gave, what you look for. How about we switch to on the exit side of things? I think lately, in terms of IPO market, particular for a lot of companies like with Chinese background, been tough for the last couple of years. And then meanwhile, secondary market in the US is also not going so well. And a lot of the IPO that went last year, I was looking at a report out of pretty much all of the IPOs that Andreessen Horowitz had gone public, only one are still above IPO price, which is Airbnb. Everybody else has dropped like 30–50%. So what do you think about the current environment with public market exits, SPAC, the whole 9 yards? Love to hear your thoughts.
Yeah, I think we had a long period of easy money since 2008. The Fed has printed a lot of money from, I think the balance sheet was like 600 billion and now it's 8 trillion. So we have 10x money over the past like 14 years. And easy money has made the VC market really hot, and a lot of founders who will be able to burn cash to build their business in the past. I think going forward, at least in the next 18 to 24 months, the easy money will be gone because of all the inflation problem, increasing interest rate. So for founders who are already building your business, definitely you have to reserve cash and think about cutting costs to survive for the next 24 months without any fundraising possibly. That's number one. For those of you who hasn't started your business, I think really think about, don't think about the comps, because in the past a lot of founders would be like, oh, this company solving a problem in US, I just copy it in Southeast Asia and I would be able to raise money. But I think VC become a lot more practical and would look at your unit economics, whether or not you can make money, your headquarter expenses, whether or not you can make money from one customer. In the past, nobody cared about unit economics. Everybody only go for scale. But now if your unit economics is not positive, no VC would be giving you like billions of dollars of money to help you to build scale and hoping that you will become profitable when you are the only player. So I highly encourage all the founders think about a effective way. So running a startup, it will be the same as running a business in the past. You have to conserve cash, and then it's not easy to raise money as before anymore.
Yeah. I think a really quick comment on this. in the last couple of weeks, we're already seeing, I focus on more early stage. Before, valuation in the US always is a little bit more expensive. You're talking about anywhere from, the low will be like 15, 20. And then if it's somebody who has sold companies before, 40 to 50 in valuation in US dollar. In the last 2 weeks, some of the experienced founder was actually open to any terms, which I think what's happening in the secondary market is also trickling down in terms of valuation. So what Joe's talk about, to reserve cash 24 months, just cut costs as much as you can, be more conservative just in case, because if the exit environment is not so good, which will trigger down if you're working on private companies and startups in terms of valuation and your ability to raise.
But the silver lining is that if you can survive through this down cycle, you will come out very, very strong in the next cycle.
Yeah. So I think we're both super bullish and excited to continue to invest and support awesome founders.
Yeah, definitely.
So in this case, guys, we're open for any questions that you may have. Feel free to raise your hand, and especially please type up your questions in the chat and also in the Q&A, and I will bring you guys up in a few minutes. I have a couple more questions. Joe's a little bit more generic about how you see the Hong Kong ecosystems these days. So I think like when I was working on the Dolphin, obviously it's a little bit more in mainland. The ecosystem actually have improved quite a bit. And I think in addition to yourself, you're now seeing from the Alibaba Entrepreneur Fund, and then a handful of others are getting more and more active investing. But I guess, how do you see the ecosystem in terms of improvement, and what else need to be improved?
I think, first of all, Hong Kong was always a low-tech city in the past. We were mostly focusing on the financial, but over the past year, with a lot of private company, there's a set of private company, such as like Lalamove, GoGoVan, and Klook, that the early, and then Casetify is another startup, which is the casual positive guy who doesn't need any VC money, kind of build a success case. I think success case is really important. At the end of the day, founder has to believe that you will also succeed in order to continue your venture. And in terms of funding, there are more government help from Cyberport and Science Park. They will support like very low cost offers and a lot of incentive for you to hire people here. There are different type of visa if you hire PhD for the AI company. And then our fund also got funding from the Innovation and Technology Fund. So if we invest in any kind of startup with a Hong Kong office, for every $2 we invest, ITVF would match our investment for $1. So that actually encouraged us to look at more company with a Hong Kong office and Hong Kong staff. And not only us, there are several other funds actually supported by the ITVF. I encourage the founder to go to ITVF website to look at all the co-investment partner. We are one of them, and those of the company would be more than happy to look at your startup if you have a Hong Kong office.
On this particular program, like if Joe, if you work with IPV, do we as a founder have to pitch them again? How's that?
No. To them, it's more like a procedure, because they already work, because the government knows that they don't have the expertise to pick and choose business model. So they rely on us. I think the only thing they would look at is some legal issue, whether or not you are operating a legal business. So we have a case called ICW. What they do is super legit. They are a platform for the factories and the US buyer like Walmart to connect and communicate with their product certification. Because in the past, they have to do email to communicate about the certification. And then now he made a platform to make everything easy. So we thought that there would be no problem for ITVF to co-invest at all. Such a business is trading and it is tech. But then ITVF found there's a problem of their office, because they were renting an industrial building, which a lot of startups do that. But the industrial building is it's not supposed to, you are not supposed to run the office, even though a lot of is already grandfather, everybody do that. But if you are trying to be super legal, it's not proper. So we have to relocate the office to a commercial building in order to get ITVF funding. So what they are worried about is Hong Kong government's reputation and whether or not you are operating a legal business, more than whether or not you will be profitable.
Got it.
Or generating an income for the government. No. Yeah.
Got it. Got it. I see. So the due diligence piece is a little bit cumbersome, I guess.
Yes.
Okay. Got it.
But it's still good for the founder. First of all, you get extra funding, and then if you have backing from the Hong Kong government, you kind of increase your reputation when you work with other business partners. So when you do business development, by saying you are backed by the Hong Kong government, it gives a lot of comfort to your business partner, and it kind of help you to do any kind of business development or even hiring.
Got it. Okay. Very cool. Thank you for explaining. I think this particular program been a little bit opaque sometimes because it's another level and working with specific funds. But I just included the website for the program for everybody who's on the call to check it out. So you can check out like the list of funds, including MindWorks, that is part of this program. Okay. I'm now open for Q&A. We have a few more minutes left. Feel free to raise your hand, and if so, I'm going to bring you up to be on video to ask questions live with Joe. I started to ask a few of you that I know like you guys are working on something to ping you guys if you have any question. Again, no pressure. But meanwhile, I'm going to wait for you guys to send questions. So Joe, while we're waiting for, I'm going to bring up. I was going to one sec. I'm going to promote Albert to a panelist to bring his video on. So let's give him 30 seconds to come back, to come. So Albert is actually quite involved with Hong Kong UST and City U. And hello? Is it working?
Yes.
How are you, Al? Oh, nice background. What is that background?
Washington U. St. Louis.
Oh, nice. Okay.
Where I graduated. Yeah.
That's great. Great school.
Almost 60 years ago. No, 48.
Okay.
Joe, thanks a lot. I look forward to meeting Edith and you too at some point in time. I worked for a bank for 33 years. I lost all my banking knowledge already. I'm now focused on universities, as Edith said. I just want to ask, if students want to know more about startups and VC, including working, any advice you can give me to connect to you and other companies? I recently chaired a career development committee for USD, including people like Liping Zhang, chairman of Blackstone, and New World Development Services CEO, and so on. And I am keen to connect students for summer internships or for knowledge. Can you advise what's the best way to do it, Joe? Thank you.
I think for my firm in particular, we are connected now. We can perhaps explore some internship program for the students to build their experience, because we see it's to be honest, a small industry. It's not easy to get the experience per se. So I think start early. And in general, I think for students, it's easier for them to get some experience in the startup world, working for different kind of startup. Or my background, I also come from research analyst background in the fund. I think that helps. So I think if you want to go straight to VC, it would not be easy because the quota and the number of employees in this industry is rather small. But if you cannot get VC job directly, always start from either startup. If you know how to build, a lot of VC, they are successful startup founders. or you can start from the financial industry as a financial analyst.
Okay.
Yeah.
That's great. Yeah, I actually want to encourage, if any of us have sort of younger and the kids in high school or college, is really encourage them to work in a startup for a summer. It's such an amazing experience because, don't get me wrong, I think working in big companies, you learn different things, but startup usually give you a lot of opportunities to almost like take on as much responsibility as you can, because everybody is super scrappy and they let you do a lot of things. So it's a great experience. And plus you can work with the founders directly. Such an amazing experience. Highly recommend, and is good for your resume regardless. So Albert, thank you for your great questions. I'm going to bring up Jay next. Give me 1 second. Okay. Bye, Albert.
Bye-bye.
See you
Bye.
soon.
See you soon.
Next, we have Jay Chen.
Hi, Edith and Joe. Can you hear me?
Yeah.
Yes. Welcome.
Hi. Thank you so much for your time and sharing and insights. This is Jay Chen, and I have my own healthcare startup, very early stage. So I have kind of a question is that so recently there are so many saying that the market is so bad, so it would be hard for startup to just go to the VCs and raise fund. But for me, I run my own healthcare startups. I try to implement our solution in the market. The profitability is much better than our competitors. But unfortunately, our cash flow is running a little bit short. So, and we don't have much resources to just focus on our business because we can't even market ourselves in the market. So it's very obvious that we don't have much cash to to reach to the point for the company for cash break even. So do you think we should cut cost, or maybe we should work harder on fundraising?
Wow, I think that doesn't really conflict each other. You should do both.
Okay.
I think first of all, it's a tough environment, but talking to VC, not only you want to get money from them, but you also, if you cannot get money from them today, you will maximize your chance to get money from them in the future, because by pitching them, you know what they think and what they look for. Yeah. And you slowly work towards that direction. And then at the same time, you have to, if you are running out of cash, definitely cut costs and then raise money from people who are more, I think there are two kinds of investors. VC are more financial investors. We are investing to grow your business and to invest in a potential unicorn. But there are some strategic investors who will be less strict about your financial performance. If you can help their business to grow, they would be more happy to put in some money to create synergy with their original business. So I think if you cannot go for VC money right now because it's not scalable enough, you can always look for any strategic investor to increase your run rate.
Okay, got it. Thank you so much.
You're
Thank
welcome.
you, Jay.
Thank
Yeah,
you.
so on this note, I think being a founder, your number one job is to hustle, is make sure that you don't die. So there is no, it's great we're in a safe environment, you can ask whatever, but the key thing is that it's not like a linear thing. And this is not a job. This is your show. So you have to do everything to make sure that you don't die. You do everything you can in parallel. Anyway, I'm going to bring up Bob real quick. So Bob is advisors for many cyberport companies. He's based out of the Bay Area. Bob is going to take a couple minutes.
Here I am. Hey. Hey, Joe. Great thoughts. Thanks. You mentioned Cyberport, and I've been a mentor, speaker, advisor there for years. And my question is around EdTech, because I still see quite a few EdTech startups in Southeast Asia, especially Hong Kong, but of course, mainland is kind of dead now. So are you still seeing that as viable? as an application or a startup? And is there any hope of getting back into mainland?
When you say ed tech, it's education tech. Is that correct?
Ed tech, teaching and learning, online learning, offline learning, parents and yeah.
Yeah, ed tech is always a tricky sector, especially if you do not go back to China. If you do Southeast Asia, I think it's one of the most complex problem to solve because it's difficult to scale across the region. Each of the country has their own education system, and if you need to scale, it's not easy to find a problem that's generic across different country. China, I think China is a very policy-driven country, and now they have kind of discouraging education company become a profitable business and going IPO. I think that would last for at least like 2-3 years. So there would be no chance to do any edtech in China at the moment, I would think, and it's not easy to get any funding. So I think focus on outside China is we are really into edtech and find a problem that's more generic rather than country focused. If you are country focused, then you should focus on building your cash flow instead of there are a lot of business like education. They are actually profitable business because parents, especially from Asia, they are willing to pay for education, pay a premium. So a lot of company are profitable, but they are private company. I think that's another route.
Great.
Yeah.
Thanks, Joe. Yeah.
Thank you, Bob.
Thanks.
I will promote back to attendees. I think that is it for our questions and Q&A for today, unless anybody want to ask more questions. We don't have to like go on to the full 60 minutes. And my final question for Joe, any final thoughts, like advice, not only for the founder, but also for investors in Hong Kong. I think everybody in Hong Kong really wanted to help the ecosystem. If there's anything that you want to suggest and we can do, what's your final thoughts?
I think COVID kind of make us like communicate a lot less than before. I think COVID now is getting much better. We should come out again, share ideas, share the investment case that you have seen, and then we can always support the founders together. Sometimes I think investment is also the investor, besides providing money, we also provide a lot of advice and connections to help founders to build. If there are more helpful investors, the more likely the founder will succeed. So sometimes among investors, we are also collaborating among each other, trying to help the founders together and build a sustainable business.
Yeah, well said.
So we should all come out and get it again.
Yeah. I can't wait to come back to Hong Kong, and I welcome all of you guys to come visit me in Silicon Valley. Founders Hong Kong had a very, very large pool of mentors. They're all working in Silicon Valley, in the Google, Facebook, Apple of the world, and they all want to help. For those of you actually wanted to reach out, our website listed many of them, and they are really my co-founder, Philip Lam, who's the founder of HomeCourt. He usually will manually screen each and every one of you who apply, but here's a list of mentors who's available to help, and they really, really want to help and support. And these are folks who are truly have experience scaling up very large platform and product companies in the tech space. So that we're all here for you and support you, and come visit soon. But with that, Joe, thank you so much for taking the time today.
Yeah, thanks for having me.
And I look forward to see you in person soon. And if MindWorks gonna like host a fun event activities, and happy to help promote. So we all need it.
Yeah, looking forward. Yeah, to see you again.
Okay, awesome.
Thanks.
Thank you, Joe.
Bye.
Bye, guys. Take care.